This right here can enable you to have $1 million or more by the time you retire. This isn't clickbait, it's not a joke, and by the end of this video, I'm going to prove it to you. So if you're in your 20s and you haven't thought about retirement yet, this video is your wake-up call. Because what I'm about to show you is simple, powerful, and can completely change your financial future. All it takes is $5 a day. That's the cost of a fancy coffee or a cheap fast food meal. But instead of spending it, you're going to invest it. And over time, it's going to grow into a fortune. Not only am I going to show you the numbers, I'm also going to show you where to put that money to work so that you'll be able to experience the growth that I'm talking about. The strategy isn't about making drastic lifestyle changes or earning a six-figure salary. It's about consistency and the power of compound interest. Hi, I'm Greg Hardy, and welcome back to the channel where we talk about all things personal finance, investing, and building a financially secure future. So if you're passionate about taking control of your finances and learning something new every week, subscribing is the best way to stay connected. One click helps grow this community and brings this knowledge to others who need it. Thank you. Most people underestimate what small daily habits can do over decades. Imagine if instead of spending $5 a day on things that you barely remember, you put that money to work for your future. By making this simple shift, you can build serious wealth without feeling like you're sacrificing anything. The key to all of this is investing, not just saving. A savings account isn't going to make you rich, but the stock market has historically delivered solid returns over time. And when you use tax-advantaged accounts, like a 401k or a Roth IRA, you're going to supercharge that growth by minimizing taxes and maximizing compounding. Even if you're starting late, there are ways to catch up. You'll just need to invest a little more. The sooner you start, the easier it is. So let's break it down step by step to show you exactly how this works. Compound interest is one of the most powerful forces in building wealth. It's like putting your money on autopilot and letting time do the heavy lifting. The concept is pretty simple. When you invest, your money earns returns. Then those returns start earning returns of their own. So over time, the snowball effect can turn even small, consistent contributions into a fortune. The key is time. The longer your money has to grow, the more powerful compounding becomes. That's why starting early, even with just a few dollars a day, makes such a massive difference. So let's break this down with real-world numbers. If you're 25 years old and invest just $5 a day, that's $150 a month, into an S&P 500 index fund, which has historically averaged about 10% annual returns, here's what happens. After 10 years, you'll have invested $18,000, but thanks to compounding, your account would be worth over $30,000. Fast forward to 20 years, and your total contributions of $36,000 could grow to over $100,000 or more. But here's where the magic really happens. After 42 years, that's 67 years old, that small habit of investing just $5 a day could grow to well over $1 million. The best part of it is you don't have to be a stock market expert to make this work. You don't need to pick individual stocks or try and time the market. Just consistently invest in a diversified index fund, set it and forget it, and let compounding take care of the rest. The earlier you start, the more time you give your money to grow, and the less you have to invest out of pocket to reach your goals. But here's the catch. Waiting is the most expensive mistake that you can make. Every year you delay means you'll have to contribute even more to make up for that lost time. That's why the best time to start investing is right now. Even if you don't have much, just start with whatever you can, because when it comes to building wealth, time is your greatest asset. Now that we've seen the numbers, let's talk about where to put that money to work. If your job offers a 401k, you need to take full advantage of it, especially if there's an employer match. This is essentially free money, and it can accelerate your retirement savings faster than you think. Many employers will match a certain percentage of what you contribute. Often it can be dollar for dollar, up to a certain amount. For example, if your employer matches up to 5% of your salary, every dollar you put in up to that limit is instantly doubled. That's a 100% return on your money before it even starts to grow. If you're investing $150 a month and your employer matches it, you're actually investing $300 a month, which means that you're going to hit your retirement goals twice as fast. Another great thing about a 401k is the tax advantage. Your contributions are made pre-tax, meaning they reduce your taxable income. This not only helps you save on taxes now, but it also allows your money to grow tax deferred until retirement. That means instead of paying taxes up front, your investments can compound and grow without interruption for decades. When you withdraw the money in retirement, you're going to pay taxes then, but ideally you're going to be in a lower tax bracket. The bottom line, a 401k is one of the easiest ways to build wealth, and if your employer offers a match, not contributing is like leaving free money on the table. So what if your job doesn't offer a 401k? Let's explore another option. A Roth IRA is one of the most powerful tools for building wealth because it gives you something incredibly valuable: tax-free money in retirement. So, unlike a 401k account where you have to pay taxes when you withdraw your money, a Roth IRA lets your investments grow completely tax-free. That means if you turn your $5 a day habit into a $1 million retirement fund, you're not going to owe a single dime in taxes when you take that money out. Imagine that. Your future self getting to enjoy every dollar you've invested and earned without the IRS taking a cut. Now, the key to maximizing a Roth IRA is consistency. In 2025, the annual contribution limit is $7,000 for those of you under 50. If you're 50 or older, you can contribute an extra $1,000 a year to make it $8,000 total. The earlier you start, the more time compound interest has to work its magic. Since you contribute after-tax money, you don't get an immediate tax break, but the long-term benefit is worth it. You lock in tax-free growth and withdrawals for life. If you're serious about financial freedom, a Roth IRA is a no-brainer. Get started as soon as possible and let time and compounding do the rest. Getting started with investing is easier than you might think, and the best time to start is right now. The first step is to open a retirement account. If your job offers a 401k, sign up and contribute at least enough to get the employer match. Remember, that's free money that can help you reach your retirement goals even faster. Now, if you don't have access to a 401k, don't worry. You can open a Roth IRA through platforms like Fidelity, Vanguard, or Charles Schwab in just a few minutes. Remember, the Roth IRA gives you the tax-free growth, making it one of the smartest ways to build wealth long term. Once you have an account, the key to success is making investing automatic. Set up an auto transfer of $150 a month or whatever amount you can afford from your checking account to your Roth IRA or investment account. When it happens automatically, you don't have to think about it and you won't be tempted to spend the money elsewhere. This simple habit takes the stress out of investing and ensures that you're staying consistent, because consistency is what builds real wealth. So now, what should you invest in? The good news is that you don't need to be a stock market expert. So instead of picking individual stocks, a simple S&P 500 index fund is one of the best ways to grow your money. The S&P 500, as I mentioned earlier, has averaged about 10% annual returns over a long period of time. And funds like Vanguard's VOO, Fidelity's FXAIX, or the ETF SPLG let you own a piece of 500 of the biggest companies in America with just one investment. The most important step? Just start. Whether it's $5 a day, $50 a week, or $500 a month, the key is getting your money working for you as soon as possible. The sooner you start, the less you'll have to invest to reach your goals. Open your account, set up auto investing, and let time and compound interest do the rest. One of the biggest excuses people make is, I don't have enough money to invest. But here's the truth. If you can afford a $5 coffee, a fast food meal, or a streaming subscription, you can afford to invest. The key isn't how much you start with, it's getting started and staying consistent. Even small amounts like $5 a day add up over time. And as your income grows, you can increase your contributions, making your financial future even stronger. The real question isn't whether you can afford to invest, it's whether you can afford not to. Another common fear is the stock market is too risky. Yes, the market has its ups and downs, but over the long run, it's always gone up. Even with crashes and recessions, the S&P 500 has averaged about 10% annual returns over the last 100 years. That means if you stay invested and don't panic when the market drops, your money will keep growing. The real risk isn't investing, it's sitting on the sidelines and letting inflation eat away at your savings. Then there's the excuse of, I'll start later when I make more money. But waiting is the most expensive mistake that you can make. The earlier you start, the more time your money has to grow. We've talked about compound interest, so a person who starts investing in their 20s will have far more money than someone who waits to invest until their 30s or 40s, even if they invest less overall. So you don't need to wait for a big paycheck to begin. Start with whatever you can and increase it as your income grows. At the end of the day, there will always be reasons to delay, but none of them are worth sacrificing your financial future. The best time to start investing was yesterday. The next best time is today. Take action now, no matter how small it is, and let time and consistency work their magic. This isn't just a theory. This is a proven way to build wealth and secure your future. The difference between those who retire comfortably and those who struggle often comes down to one simple choice: getting started. You don't need to be rich, you don't need to be a financial expert, and you don't need to time the market perfectly. What you need is consistency, patience, and the discipline to invest even small amounts of money over time. So imagine looking back 20, 30, or 40 years from now and realizing that the simple decision to invest $5 a day turned into a 6 or even 7-figure portfolio. The only thing standing between you and that reality is taking action today. The best time to start was yesterday. The next best time to start is right now. Open that account, set up your contributions, and let time do the rest. If this video gave you a wake-up call, don't keep it to yourself. Share it with someone who needs to hear it. And if you want more practical, no-nonsense advice on building wealth and securing your financial future, check out this video here. And also, make sure to subscribe. Thank you for watching. I'll see you in the next one.